Yeah, thank you, Monami. So the final paper for today's session is titled Grievance Redress by Courts in Consumer Finance Disputes. The paper is authored by Karan Gulati and Renuka Sane, both of whom are researchers at NPIPFP. And the discussant for this paper is Professor Adam Friedman. Welcome, everyone, and over to you, Renuka.
Thank you, Misha. I hope everyone can see my screen. Can you?
Yeah.
Okay, great. So, before I start the paper, I must sort of say that the idea for this paper actually came in the last EMF when over dinner somebody asked me what happens with Indian courts and why are Indian courts not doing class action suits. And I didn't have an answer for that person then. And so I sort of went back and said, this is something that we must study. And I'm very excited that we are getting to present this paper in the 2020 EMF. So this paper is co-authored with Karan Gulati at NIPFP, who is the legal brains behind this paper. So before we get into details about what we do, I want to motivate a little bit about why study courts in the first place. um, as many of us here would agree that the complexity of financial products and the existence of market failures requires has meant that we require higher degrees of protection in consumer finance. And over the last 10 years we have seen how retail finance has had so many problems where financial service providers are not able to service their customers, and very often the customers have nowhere to go. This is because grievance redress processes at regulators is very fragmented. So the financial sector in India is such that we have different regulators for different products, and each regulator has its own grievance redress mechanism. And very often these grievance redress mechanisms have not worked very well, so there are often vacancies. They often refuse to hear cases, and very often we've found that the ombudsman offices actually tell policyholders to instead go and approach consumer courts. So for example, we have one data point where the banking ombudsman passed an award in less than 1% of the cases, whereas the National Commission of the Consumer Court, the disposal on banking cases was four times that of the ombudsman. So it clearly something is going wrong with the regulatory framework, and hence people are heading towards courts. And if you study the kinds of cases that happen in consumer courts, because consumer courts hear more cases than just finance, but banking and insurance cases typically constitute about 17% of the cases in consumer courts. This is a paper by Kinal and Ranjan, who look at the state commission in Karnataka. And this 17% is the largest category of cases in consumer courts. So clearly people are flocking to courts because there is something that is problematic with the grievance redress framework amongst regulators. So it's useful to study the role of courts on the nature of disputes, and it helps us also understand what is going wrong in these financial markets, and perhaps it can also help us frame better consumer protection laws. So I think that's what motivates us to study how Indian courts are behaving vis-a-vis consumer finance. And we had a Consumer Protection Act in 1986. This was very recently changed to a new Consumer Protection Act. And hence, to study the role of courts, we basically ask three questions in this paper. We want to understand the structure of the courts. We want to understand how courts are deciding cases, what kinds of decisions are they taking, and what are the shortcomings in the current framework, so that on the one hand, while we must augment our regulatory framework, we must also see how we can improve the functioning of the courts so that there are better avenues for redress in consumer finance. So let me just explain a little bit about the structure of courts in India. Typically, in this paper, we have only looked at complaints made by consumers. So, for example, if there is an investor who has taken a loan for a commercial purpose, we don't include that kind of a complaint in our analysis. So everything that I am saying is about consumers. It's also not about debt recovery mechanisms, because that's a separate matter really. So we are, and a complaint is only a complaint when it is made in written to one of these agencies. So those are the classes of cases that we are looking at in this paper. And so just to give you a brief overview of how the structure is in India, so imagine there is a dispute. You could either go to the regulators, and as I mentioned earlier, there are 4 different regulators, and you could also go to the courts. Now, the structure of courts in India is such that there are consumer courts under the Consumer Protection Act. And here you have the district commission, the state commission, and the national commission. So typically, you are, depending on the threshold of your case, you are to go to the district commission. So I believe that the threshold for cases is about 1 crore, yeah, 1 crore. If it's below that, you go to the district commission. If it's above that, up to 10 crores, you go to the state commission, and above that, you go to the national commission. Of course, the case can travel from the district to the state to the national on appeal. Alternatively, you could go to the district or the high court, but typically that is rare. uh, for consumer finance cases, we expect that most people will go to consumer courts, and of course there is you can appeal these cases at the Supreme Court. There is a little bit of a mention of these alternative dispute resolution mechanisms that we also study, and what we find is that arbitration in India, in terms of consumer finance cases, has been not allowed. And perhaps that's something that we need to visit. But so, therefore, in terms of ADR mechanisms, the only possibility is really mediation. And we haven't seen much of this in the case of consumer finance, also perhaps because these are. This is still to be tested in this case. So as I said, I've already explained this with the picture, so I'll skip over this slide. And the question is, sure, you have these consumer courts, but what are the powers that these consumer courts have? So according to the Consumer Protection Act, a consumer court may order the opposite party to either remove the defect, return the price of the goods or the damages, pay compensation, and ask them to withdraw the goods or services from the market. So typically, this is what consumer courts can do. High courts are bound to decide the cases either within the confines of a statute or the constitution. So, for example, there are writ petitions that happen at the high courts on some of consumer finance cases. And of course, with the Supreme Court, there is no such restriction on how the Supreme Court can grant relief. So, really, this is wide open. The Supreme Court is not restricted to any one particular method. So, with this background, the question is fine. What is it that these consumer courts have done? Now, it's very difficult to get data from the district and the state courts. So, we have managed to get data from the National Commission, which is the appellate mechanism in the consumer courts. And we find that about 91,000 cases were initiated for actual adjudication between 1989 and 2019, so almost 30 years. Um, and of these, 17%, or about 16,000 cases, were related to banking and insurance. When it comes to disposal, we only have data from 2008, and about 5,000 cases have been disposed of in the last 12 years. And of these disposed cases, it's taken about 2 and 3 years for banking and insurance cases to be decided. Of course, these numbers can get lower because in this data set, we don't have cases that were disposed of before 2008. And so these averages need to be sort of looked at from that point of view. So, if you just see this picture, you'll see that the rate of initiation of cases is a lot higher than the rate of decisions. And I suppose to those of us in India, none of this is very surprising. And this sort of indicates the load on these consumer courts. And I will come to that when I'm discussing some of the problems with these courts a little later. So, in order to study what decisions courts have taken and what position they take, we basically build a set of cases related to consumer finance, and we source judgments from legal databases, books on consumer protection, and reports of courts and regulators. So, we reviewed about 300 cases, and in this paper, we refer to about 40 cases. These are cases that have been cited the most often in subsequent judgments. So in some sense, they are sort of quote unquote the important cases in this particular database. So these are still just a representation of consumer experiences. They are not the universe of cases heard by courts. But because they have been the ones that have been the most cited, we think that they are a reasonable reflection of the decisions or the positions that courts take on these matters. So when it comes to banking, we see that courts actually do side with individual consumers because courts sort of believe that they have come with clean hands. Typically, what happens is that if a financial service provider has not complied with any RBI circular or guideline, it is pretty clear that the court will side with the consumer. In the absence of the guidelines, sometimes courts are also formulating these guidelines themselves and then asking the banks to follow them. Similarly on price and non-price disputes, they seem to actually side with the consumer, except for the case when sometimes the consumers take some time in filing an application. So for example, in one case we found that there was this really old customer whose lawyer had made a mistake, and that old customer could not have stepped out of the house or done a lot, and hence that customer took some 100 days to file a complaint. And the court said, too bad, if you take so many days to file a complaint, then this is not going to go for you. So that's roughly the stance of the court when it comes to banking related cases. When it comes to insurance cases, uh, it has been a little bit more problematic in the sense that the courts have said that we will follow whatever is there in the contract. So if you signed on a contract, then sorry, this is on you, and we are going to take a stance that is pro contract. Here there is a subtle distinction. If the consumer, if it's found out that the consumer did not know the terms in the contract, or these terms of contract were not told to the customer, then courts take a pro consumer stance. But if the contract terms are written in such a manner that the consumer has no hope in hell of ever understanding what is there in those terms, but he knew of the term but did not understand the term, then the courts have said that we are going to go with the firm. So we feel that this is a bit of a problem in the way courts are looking at some of these consumer cases, especially in insurance. And again, we'll come to that a little later about how should the court think about unfair contract terms, or obscure or obfuscated contract terms, and in what way should it side with the product provider or the consumer. But so basically in case of banking it's pro consumer, but in the case of insurance, because the contracts are written in such a poor manner, we find that the courts have been pro the insurance company. So
Renuka,
what
two
are
more minutes.
sorry
2 more minutes, please. Two more
okay.
minutes.
Okay, great. So what are the problems with how the courts have sort of behaved? So one is that even when courts have been pro-consumer, they tend to award very low compensation. So for example, this is a very famous case where this retired person was sold a unit-linked insurance product. And between 2007 and 2012, he had lost pretty much the full 50,000 rupees, and they had 248 rupees left in his policy, and he had been missold this policy. So of course he won the case, and the insurer was directed to return the original amount of 50,000 rupees, but no interest was granted. And you can see how courts are not taking into account the time value of money when they are deciding these compensation cases. And this sets a really bad incentive for firms, because what do I have to lose if I have to pay 50,000 rupees 10 years later, when I could have just sold this. It seems like there's just absolutely no cost to the firms. And I think in the paper we go into a little bit more detail about what is the problem in terms of how courts are setting some of these compensation rules. But since I'm running out of time, I won't talk a little too much about it. I mean, again, on delay, I think we don't need to belabor this point that there are problems of delays in the courts. And while these numbers of 2 years and 3 years possibly look very nice relative to the civil courts in India, from the benchmark of the law, they are still high because the law says that these cases had to be decided within 3 months. So, 65% of the banking and 71% of the insurance cases do not meet these goals. And again, we have discussed a lot about how courts can be restructured to solve some of these delay problems. Then there is this problem of caveat emptor, which I talked about when I was discussing the insurance cases, where courts are essentially saying, let the buyer beware. So if you have signed the documents, then you are responsible for the terms. And, while there has been some movement in the case of e-commerce companies, where unfair contractual terms are now under the scanner, within the CPA itself, this somehow has not made it to the consumer finance cases or to the banking and insurance cases. And in 2018, a bill was also introduced in Parliament that addressed some of these challenges, but somehow this bill has not become law till now. And I think that some of these issues need to be addressed before courts can be sort of take a more pro-consumer stance. And finally, I think there is the problem of no class action suits in India. There are two reasons. I mean, there are substantive law reasons. For example, why is it that, how do you make a particular class representative? And there are certain rules about it that makes it difficult. And now the second big problem is that the new Consumer Protection Act has actually taken away the power to initiate class action suits from individuals, and the new regulator will now have the power to initiate these suits. So I think that's also quite problematic, because a state agency is now going to come in the middle, and consumers cannot form a class and go directly to court. And of course, there are some procedural and financial hindrances like stamp duties, problems of third party funding, contingency fees not allowed, and all of this sort of hinder or make it difficult for class action suits to take place. And class action is one way in which smaller consumers can actually take on a larger financial firm, and it seems to be reasonably successful in the United States, but it's something that does not happen here. And finally, there is this question of specialization as to who sits on these benches. The people who sit on these benches typically are retired judges or bureaucrats. They lack specialization in finance disputes. And again, this is something that we recommend, that for consumer finance cases, perhaps we need to have people that are more well versed on financial matters inside the courts. So finally, I'd like to conclude by saying courts have played a very important role in consumer finance disputes, especially because the regulatory grievance redress mechanisms seem to not be working. And while in the case of banking, it has been more clear cut. In the case of insurance, courts have taken a pro industry contractual compliance stance. And because they also tend to award low compensation, there are a lot of delays. There is no system for class action suits in India, and they lack specialization. Overall, despite the perhaps slightly better performance of courts relative to the regulators, the incentives for the financial firms to behave better remain non-existent, really, because there is just absolutely no deterrent effect whichever system you go to. And we hope that by highlighting some of these issues, we will be able to more talk about them, and perhaps someday make it to seeing some change in the way some of these things are done. So thank you very much.
Thank you, Renuka. Quickly over to you, Professor Adam, for your remarks. If you can keep it to 8 or 9 minutes, I'd really appreciate it.
Sure. Let me just share my slides here. Sorry. Okay. Well, can you see the slides?
Yeah.
Here, I can.
Yeah.
Okay. Great. So first of all, thanks very much for the opportunity to comment on this paper and participate in the panel. It's a really fascinating paper and very important topic, and I learned a lot. I will first just try to summarize what I think I got from the paper, and you can correct me if I'm wrong, and then share a few comments. the paper is examining, obviously, the role of courts and commissions in their role in adjudicating disputes over consumer financial transactions, products, and services, and focusing on disputes with banks and insurance companies, describes the kind of process of these disputes and the available reliefs. It's kind of an important descriptive part of the paper that I found quite useful, especially. And the findings are what I consider to be, and maybe I'm wrong about this, relatively low but growing caseloads. I mean, you have 99,000 over a long period of time. That there are, I think, some meaningful protections, especially against banks, generally not against insurance companies, it seems, based on kind of the basis in contract law, contract interpretation, and that overall the protections for consumers in financial transactions, at least ex post, are relatively weak. And the kind of paper explains this circumstance as being a result of kind of the modest relief available to consumers if they win, low deterrent effect, delays in seeking redress through the system, a strong caveat emptor and contract enforcement, especially again in the insurance sector, the lack of class action route and lack of contingency legal fees, which we might think of as kind of low access to justice problems, and a lack of specialization in the field among the judicial actors. And as I took it from the paper, there isn't kind of a proposal section, but going kind of piece by piece, it seems that some of the proposals in the paper are to improve disclosure regimes by sector, to enable more class actions. And I guess now that would require changing the law to ensure that private individuals can bring class actions and reduce the number of affected parties that are necessary to bring a class action, to allow third-party funding of litigation and contingency fees, and to create specialized tribunals or a council. And one question, maybe jumping ahead, is how this council that's mentioned in the paper would be different than the CCPA, which I'm not terribly familiar with. I think the important contributions of the paper, again, is a very useful overview of the kind of range of approaches for protections of consumers and financial relationships, and a nice account of the underlying justifications for protections, and a set of plausible proposals to improve the role of courts in that toolkit. So I just have kind of a handful of comments, some about the paper and some about just the kind of topic. So the first is on the relative kind of performance of courts and commissions. So at the beginning of the paper, there's kind of a discussion of the differences in these different pathways. And then in the discussion of the data, it seems to be kind of grouped together. And it'd be interesting to know whether, whether there's this meaningful difference. And some of this I think can be teased out from the paper, but maybe more developed, it could be more developed as to whether and when courts and commissions are performing differently, and whether, commissions are doing a meaningfully better job than courts, or at least separating out the discussion and the data a bit more about the performance of courts versus commissions. It might be useful or interesting to have a bit more on the background context for the role of courts. In other words, what is the role of courts vis-a-vis other tools in the toolkit, especially things like, the current disclosure regimes. I'm sure, there's obviously literature on that, but it might be useful to kind of, at least if nothing else, provide a bit of a background. And then maybe going forward, or even further rather, what we think the appropriate division of labor among these tools would be. How much do we want? In the US, for example, we basically have a very primarily disclosure-based regime, rather than a regime that relies on kind of ex post redress. And so, do you all have an idea of what that balance should be in general? And again, kind of, maybe in particular, how much we want to rely on ex post redress as opposed to ex ante regulation and supervision of the counterparties, the lenders, the providers of financial products and services, especially since most of these are regulated entities, presumably subject to some supervision. What do we think is the optimal balance, or even a fruitful balance between ex ante regulation supervision on the one hand, and ex post enforcement in the courts by private actors? Thinking about the U.S. would it is an interesting comparison on this point. So in the U.S., we don't have the same degree of problems. I think people would complain about some of the similar things, but in general, we have class actions. Delay is not so much of a huge problem. The Consumer Financial Protection Bureau has, in recent years, been active, but I think most people who at least work in this area would say that we still have a problem with ex post enforcement by individuals through the courts. There's not that much of it, and there are many barriers in the substance of the law to people succeeding. So this suggests to me that at least some of the things that you attribute the problems to may not, if those were fixed, the underlying problem may still remain. I'm curious about the role, this is a bit random, but the role of unconscionability as a doctrine, a legal doctrine. I believe it's available, but I assume that, like here, it's rarely used, but at least I assume it's a kind of basic backdrop or baseline. It'd be interesting to know if anyone ever succeeds on unconscionability claims and suits over financial transactions. Just the last 2 or 3 points. One thing that's kind of interesting to note, the one buried in the Insolvency and Bankruptcy Code for personal bankruptcies and insolvencies is an express rule that allows for avoiding extortionate credit transactions, which actually, may be something worth thinking about as a possible route for ex post redress of these things. Bankruptcy is actually a time when you have an opportunity to revisit these kinds of things. In the U.S., they're not very aggressively pursued, but actually just this week, Elizabeth Warren has proposed a new major overhaul of the consumer bankruptcy regime that includes a rather robust role for challenging these things in bankruptcy.
Professor, sorry to interrupt, but we're out of time.
Okay, yeah, that's all. These are just minor points. I'm happy to stop here.
Okay. So we'll have to take the audience questions through the chat box. We have a break from 8 to 8:15. So we can, Renuka and Karan, please answer those through chat box, or please feel free to continue the discussion till the break. I'll leave it to you, Renuka, and the audience,
I think Karan has already answered several of the questions in the chat box. And I just want to thank Adam for his comments, and we'll certainly use some of them to provide more background to the paper, and also frame, the proposals that we have, which are embedded in the current discussion of what is wrong, slightly separately, so that it's clear where is it that we are asking for a proposal. On the comparison with bankruptcy, it's a great idea. I'll talk to you separately about how we can weave that into what we are thinking in terms of retail consumer finance. So thank you very much for your comments.
Thank you, Renuka. So like I said, we'll take a break till 8:15. Please feel free to chit chat on this virtual platform till then, or take a break as you'd like. And we'll resume at 8:15 and Susan will take over. Thanks all.
Thanks, Nisha. And Monami and Geetika.
Thank you very much.
Thank you, Tristan.